Having looked at both gold and junior gold miners with Eric, now I wanted to turn our attention to silver and to the silver mining sector because silver, like the junior gold miners, has lagged that incredible surge in the price of gold. Is silver's lagging to that gold price set to continue, or should it close out? And more importantly, where do we think the price of silver could go? And do we think that the silver miners offer good value at these levels? And please remember, none of this is investment advice. This is purely for education and engagement purposes only. Please do your own homework, know your risk limits and your objectives, and then invest accordingly. Eric, we know why gold, but why silver?
It's a very interesting time to ask this question, Roger. And as we know, timing's everything in life and certainly in markets. And right now, silver, I believe, just as an aside, is about to utterly explode. Why do I say that? It's because there has been a very reliable historical pattern between gold and its wild cousin, silver. Silver being called the crazy cousin or whatever because the volatility in silver, even though the trends end up mimicking each other, is greater. And so silver also has more industrial applications, which can have the economy and how that's going can impact the supply and demand of silver. But now we're seeing stuff like 28% of all of the silver coming out of the ground are going directly into solar panels. And silver, by the way, has been money for millennia as well. So I think the big thing with silver is that when gold gets too expensive and has these big runs, people start to look for a cheaper way to protect themselves from fiat currency debasement and start to put silver in the pocket of money versus industrial impact on supply and demand. And right now, I think is a perfect time. You've got 100-to-1 ratio, meaning you need 100 ounces of silver to buy an ounce of gold. And that is at the very top range where that will balance itself back out. And historically, that should get cut by 2/3.
In that case, why is it at the range? Why is it lagged gold? Because gold seems to be giving everything a clean pair of heels and silver's lagging. Why is that?
Why ask why? It just is. And, the bet is that it's going to change. The bet is that it is going to change like it always does. Sometimes these situations befuddle us and they end up lasting longer, just like, the idea that markets can remain irrational longer than you can remain solvent. I mean, I'm not recommending that people buy silver on margin and lever up, but historically, silver follows gold at certain points, and now we are looking at the phase in which I think silver is going to play catch up. It's I think it's inevitable. It's imminent.
So in that case, is now the time to be buying silver. And how should you do that? Dump up the back
Uh,
up the dump truck, or do cautiously?
well, back of the dump truck is cool, but the problem with that is that it's harder to store than gold physically because say you just want to buy 500 ounces, which at 33 bucks with fees and all that other stuff, maybe you're getting, 18,000 US dollars worth for 500 ounces. So $18,000 worth of silver is 42 pounds. So essentially, with regard to storing that silver on your own, it can be a little challenging if you want to put some serious dough in there. But I have physical silver. I have the actual physical type. I have some that is stored with various banking groups that have my physical, name and imprint on them that I can access or I can sell through the bank and get my fiat currency. But you also, a lot of people poo-poo GLD and SLV and things of that nature. I mean, I think you're a little bit better off. Like, for example, the Central Fund of Canada, CEF, is a mix of, I believe it's 60% gold, 40% silver. Um, that's an option. They're really clearly audited every quarter. We know that it's all there. You also have a situation where um, GLD, you can go into, say, for example, the Sprott ETFs for silver, and I'm very confident that they've got the silver. So you can buy the proxy through an ETF and get the exposure that way as well. I don't think there's anything wrong with that. And especially if you want to buy big size, I mean, and you can get into the futures market and all that stuff, but I like physical spot related exposure.
Do you like silver miners?
I love silver miners like my best friend right now. But the issue with silver miners, Roger, is that there just are not a lot of them that exist. And viably wise, a lot of times silver will also be, as we had talked about with critical minerals and things, will be a byproduct metal to a degree. You don't, it's hard to find pure silver deposits and assets that don't rely on, even it could be a byproduct of another element that's primary, or you have zinc in very high grades that pull the economics of silver that might be lower grade into the profitable areas. So companies will report like silver equivalent ounces, but the actual amount of silver, I don't have the exact data, publicly traded entities that are in the production business, that are in the development and or junior exploration business, it's very small, which is why, I tell my people, listen, let's just not mess around. Like, if silver is going to say, just silver hasn't even gotten back to its 1980 high yet. Okay, it's at 32, 33 bucks. We haven't even gotten back to 50. So where do you think it's going? It's going a lot freaking higher. So if you think it's going a lot higher and you want to leverage that, which is usually what you get by buying the mining stocks, you have to be getting positioned now, because once the funnel starts and the water starts coming in mass into this little garden hose, the silver sector with miners is going to utterly explode a lot more violently than the gold stocks.
And so when you're thinking about that sector, are you thinking about, again, single names or the sector as a whole? Which would you prefer?
I love them. I like them both, but I'm more of an individual name guy. I mean, my whole service, goldinvestmentletter.com, is where I do the research, I vet the opportunities, and I lay them out to subscribers in terms of literally just what I'm buying, up to what price, why am I doing it? But it's extremely liquid. It's over $1 billion entity. First Majestic is a very well known, silver producer. They've branched off a bit into gold, but they're still a primary silver producer. And it's very rare that you have a scenario like we have where First Majestic is still trading at prices like silver is at 18 bucks. It's incredible. Like, go buy some First Majestic. That's your first. You've got Pan American Silver, you've got other companies like that. Um, Once they start getting up the rung and have actually been producing and getting the benefit of the higher prices, that's where I start to look into the lower chasms of what's next, what is very exciting on the exploration side. And we can get into that in a future clip and or interview where I can talk about some of my biggest holdings on the junior exploration and development side. But there are some very, very good ones. And it's almost like pinch yourself, because these are very cheap right now still, which is why, like, for example, if you want to take a look at, finding some stuff in silver and or gold that hasn't moved yet, that we think are going to be monster winners, like, whether it's through Gold Investment Letter or somewhere else, get online, do your homework, and find some good individual names, because that's where the big, big returns are going to come from if that's what you're hunting.
And if you had to name just two attributes that you look for in a silver miner to make it attractive to you, what would be, let's say, the two most important attributes?
It would be management and the board. You've got to have people that are competent. And unfortunately, there are a ton of people in the junior mining area that are either incompetent or crooked or both. So It's interesting because you have like a whole subsector in that world that's like not even that you've got a lot of problems with people being crooked, um, or just completely inept. It's more about like there's just so many operators that are they're just mediocre, because you have geologists that are running some of these companies and they don't understand the capital market side of it. So how are they going to get the value that they deserve for their company when they can't talk to an investor or don't know how to do that? Then you have the promoters that, they're hyping everything up and they really are exaggerating sort of what they're doing. But as far as actual execution, they're relying on the third party mining engineers and geologists, and in some of those cases they just they get ahead of themselves with the stock to what they produce, and it kind of balances out. I don't know the better one to have leading a company. I like a mixture of both, and when you see a team that has a track record, I mean, you look at some of the names in mining that have just made a fortune, like the Lundins, guys like Rick Rule, that is tried and true with regard to picking what he calls penny dreadfuls and having very, very large winners. You also have people that you can follow these days that are taking large stakes in mining entities like John Paulson. You have people like Eric Sprott, who, he's extremely active, very smart guy. He actually spoke at our Phenom conference in 2018 and gave us a little bit of look behind the veil. He's an ex-analyst and talked about what are some of the tricks of what he looks for to find value in the marketplace. So piggybacking on people like them not usually a bad idea.
So, wanting to put you on the spot, obviously, where do you think the silver price goes?
I think that we are, and this is kind of similar to what I was calling, when we were getting into Q1 of 24, talking about that gold price getting through 2100 on a monthly, and that within 9 to 15 months it was going 2700 to 3200. I think that silver will be between 40 and $50 an ounce by the end of the year or January at latest, which is a pretty big move. But I also believe that silver within 18 months will be between $75 an ounce and $100 an ounce, all time highs. And we can dig granularly back into what I will want to see, and I don't have it in front of me. You want to see that monthly breakout of the 1980 highs. We did have one other test of that, right, in 11. So first things first, we're going back to 50. If it takes one last pull back to do what gold did, which was a quadruple breakout that had me so confident that it was going to go for good, we'll see. But I think silver should be trading based on historical metrics with gold at least $100 an ounce right now, probably closer to 200, and it's at 33.
And so then the question I tend to ask quite a lot, which is you can pick your junior miners, but you can only pick one of two sectors. It's the junior gold or the junior silver. Which do you go for?
Well, luckily in Britain and America, we don't have to limit our choices. So, but the answer would be there's more opportunities to take advantage of in the gold space. So just from a standpoint of having more of a buffet, of being able to look at plays at various stages that are focused more on gold, and gold being that primary vehicle, where you look at like Perpetua, for example, in Idaho, that I've mentioned. These guys have the antimony byproduct that has brought them billions in funding from government entities, but the government knows they're building a gold mine, and they've got 55 million ounces of gold that they've been working on trying to get permitted for 15 years. And they said, hey, all right, we're going to help you accelerate all of this, but we want the antimony on the back end. Who would have thought? So, that is a situation with some other companies that, we're involved in, that have these byproducts of critical minerals and antimony, but, they're building up a gold asset. So there's there are more options with the gold miners, but the upside from here in general, one of the things I should say this, here's what I would buy if you want to have some diversification and get some of the kit from the smaller names. SILV. It's the silver uh it's the silver GDXJ, and but they're smaller entities and it's more concentrated, but that is a great closed-end ETF to get exposure to various silver names. I would, and SIL is great if you want the larger cap. So I think those two are great to start where you can basically have a bit. But if I have to choose between gold and silver plays, I guess I would go with gold just because of the breadth.
You've talked about something many times in the past, which is given that you've got a reasonable time frame for the sort of higher levels of your price targets, would you also think some of these longer dated optionality on some of the stocks and on the underlying commodities themselves, is that a reasonable way to play it? So maybe someone said middle of 2026 call options on silver and gold or silver and gold miners.
Yeah, I'm glad you brought that up. I do that myself. From time to time, I alert usually my paying members on what I'm doing with boosting, long exposure vis-a-vis leaps. I like leaps. I like longer term duration. In my career with straight options investing, one of the earlier mistakes that happened with me over and over and over again was like I didn't buy enough duration. And so, I tend to buy out and I tend to buy at or in the money already and pay that premium. I don't like to, still pay a premium, but I've got to go up 50 to 80% to get to the strike price. So, yes, I think that's viable. You obviously have to look at independently what kind of premiums are you looking at on individual companies. Sometimes it doesn't line up, but for example, in March of 2020, when we had the COVID crash, one of the things that I pronounced throughout every single newsletter, free, paid, whatever, I pronounced a bottom in silver and the mining stocks on it was a Monday morning. And the trigger for this was that they had already been destroyed. But I don't know if you remember this, but the 3X juiced up ETFs, both on the bull side and the bear side, went to zero on a Monday morning. And when I saw that, I was like, bottoms in. I looked for SLV calls that were about 12 to 18 months in the future. And I put out this alert that's still out there to this day. And it was within 1% of the bottom of silver. And then by, I believe it was August, we were up 8 to 10 times our money. And so, yes, from time to time, I will take advantage of that. And I do like the extra juice that you can get on the leverage side with options, especially if you are doing it against like the actual silver price. Um, that can be very, very fruitful on the individual company side. Look, I've actually had the last couple of years, I have had a couple of big option positions that I had started buying and had 2 years to get there before they expired, and I lost my shirt. So you got to have the good returns on this stuff to outweigh being early sometimes with those strategies.
So it sounds like maybe for general investors, this is an area where you can be patient, but at the same time, you've got to take advantage of the opportunities today because a lot of these things look like they are cheap relative to where the underlying commodities are. Gold obviously has already had the move. You think silver's having the move, and you think that when they do, when these underlying stocks move, they're going to move very, very quickly. So start nibbling away today.
Look, I think that, Roger, we go back to Q4 23. We have a dialoguing together, we have a track record of calling almost to a T, the gold breakout, the price range, all that stuff. We've also had that with Bitcoin. Right now, if there's, I mean, I hate coming on here and like, it's not to like piddle paddle about this or that. Like, let's make some money. So, and let's make a call. And so, my call is that. you need to light a fire under your butt and go get exposure in gold and silver and other mining stocks. If you take anything under that, $500 million market cap and you want to go into the ghetto, like we have one list for our premium members at Gold Investment Letter that is called our venture cap list, which literally one of the criteria is having less than a 5 million US market cap. You know how many 10 and 20 baggers we've had off of that list? Like, but there's some of these plays that are still under 5 million that are going to utterly explode. So that's one extreme. And I'm not saying everybody look at something like that, but I am saying that, the indication that we saw in Q1 where the gold miners were the best performing sector in the market, that's not a one-off. And so if you want, this is the big thing. If you want value, like I can't. I bought Palantir at like 13, $14. I'm 90% out of the position. I don't know where it is today, but I can't buy Palantir at 125 and act like I have some edge. I'm sorry. I could go up, down, wazy woozy, like Matthew McConaughey said in Wolf of Wall Street. Like, who knows? It's not on the elemental chart. But when you look at some of these plays and we'll get into individual names later, but like the International Tower Hills of the world. So the companies that what we've been looking for is where can we buy gold in the ground for $4, $5, $6, $7 an ounce? They're still out there, believe it or not. And that is not going to last with gold at 3,200. Even if gold pulls back to 2,800, those prices should be markedly higher.
So, in summary, as we can see, Eric has a passion for silver and the silver miners, just like the gold miners and miners in general. He believes that silver has an incredible opportunity to the upside. There's this big double top going back to 1980 and 2011, around about the $50 level. If that breaks, we could see a surge like we did when gold broke 2,200 and then went to 3,200. In terms of the silver miners, look, these are names which can be liquid and volatile. You have to have your wits about you. You have to do your research. If you want to dip your toe in, maybe the way to do it is through one of those sector ETFs, so across the whole sector itself. And you can have a bit of patience because it might take time to play out. That's why he also looks at that longer dated optionality. Again, if you're going to use options, please do your homework on what they are and how they operate. And if you want to know more about Eric's views on the silver miners, silver and gold as well, please go to www.goldinvestmentletter.com.